get to all of the news, the flurry of news on the tariff pause today and why China was exempted as well. We're going to do that with our friends there at the American Institute for Economic Research, Paul Mueller, and with Island Capital Investments, our friend Anthony Esposito. They join me. You guys, thanks for being with us. It's kind of difficult to know where to begin because this has been such a topsy-turvy week, not only with regard to the market, but with regard to the messaging coming out of the Trump White House as well. Anthony, I'm going to start with you here today. Why did Trump issue this pause? And I'm going to ask this. Was it solely based on the fact that the bond market really cratered last night? Was the Trump administration responding to that cratering of the bond market? Did they essentially cave to the bond market? And for our viewers who don't know what the bond market is, what is it and why is it so important?
So a couple of things. Thank you for having me. No, the Trump administration did not cave to the bond market. They did not cave to our trade partners. What's going on here, President Trump and Secretary Bessent already laid out the case for what was going to happen as they moved forward with tariffs and with the restructuring of the economy in the United States. As the bond market started to sell off and yields started to rise because of an unwind of a basis trade that is very widespread in the hedge fund community and is levered up, meaning there's a lot more capital at work than there's actual capital. So there's no look back on the bond market. That was not a structural change in yields or in the bond market. That was actually the unwind of what's called a basis trade, where the hedge fund would be long the treasury and then short the futures against it to try and make that little spread, lever that up large. Now they're unwinding that trade, so they're selling the treasury and yields are going higher. The yields are very important on the 10-year, real quick, because that's where we get the cost of borrowing money. It's not the Fed funds rate, it's the 10-year yield, which President Trump and Scott Bessent have gotten down from 4.8% to 4%, and it will continue to come down. So I don't think that Treasury market and the move in yields today was of any concern or a surprise to Secretary Bessent or President Trump.
Okay, so you're saying that that was not a factor at all with regard to this decision to issue the 90-day pause. Paul, do you agree with that?
I think that's about right. I mean, it's hard to know how much they're following the bond market day to day. Obviously, they care about where the 10-year goes, and they want that to fall, and it probably will continue to fall over time. You know, there was a little dip with the news of the tariffs last week, and some people pointed to that as, hey, maybe this is one of the reasons they proposed tariffs in the first place. But I think that's, again, a very short-term view here, and it was just mentioned, you know, there are different trades that are being unwound. So I don't think the bond market is causing them to panic in this situation.
So we're seeing how the market closed today on this Wednesday. Anthony, would you describe this as where we were before last Wednesday? Is the market back to where it was?
We are very close to where we were before last Wednesday. And honestly, we're in the midst of a bear market. I've been calling for a bear market since December, January. And this is the unwind of a market that was over-levered and overvalued and had extremely narrow breadth. So we're close to where we were. Bear market rallies are very aggressive, and you should expect them, especially if you're managing assets for clients and investors. This is nothing out of the ordinary. I do think that we have lower lows to come as we move through the coming quarters. But we're back to where we were before the tariff conversation. And I will guarantee you, or in my opinion, I will guarantee you that we will move away from the tariff headline and we will move on to new topics, and this market will continue to move lower until we finally bottom out.
Okay, and then 90 days happened. Paul, I'm going to ask you this. Are we going to be back in the same period of uncertainty in 90 days? That's July 8th here. Will we be having this conversation again?
If we did, it'd be a big failure on the Trump's part. I certainly hope we don't reach the situation in 3 months from now. I agree with what said. You know, I will say that the rally today was fairly historic. I mean, you don't usually see double-digit improvements in a day, so it was really quite massive. But I also agree. I think a lot of it is sort of a breath of relief, some exuberance, some hope on kind of making some money on the downside. But things are far from resolved. I mean, Trump actually hasn't named the countries, I don't think yet, that he's suspending tariffs on. And of course, they're going to try to negotiate deals, but we don't know what those are going to look like or when they're going to come through. Um, and I think a lot of people are discounting the trade war with China. I think that has a lot of downside risks that is maybe not being priced in right now with all the relief from the other tariffs being postponed.
So, Anthony, let's talk about China. That was seemingly the main rationale from Treasury Secretary Scott Bessent for why the tariffs, both reciprocal and retaliatory, are going to be left on China. China, responded in kind as well here. And so, is this a game of chicken right now between the U.S. and China? I mean, who has the upper hand right now? Did we cave to China? Are we the loser here, or is China today?
No, I think China is actually falling behind in this game of chicken, right? They're the only one not at the table right now because of the way they retaliated. In addition, they're a surplus nation, so they export to us about 5 times as much as we export to them. We are the consumer. We are the largest economy in the world. We hold the cards here. And if they don't come to the table at some point and get to a place where the trade deficit, and I'll use the term and the thought of trade deficit, not tariff, because that's what this is really about. We need to even out and start to reduce our deficit numbers for many reasons. But if they don't come to the table and start to negotiate, they're going to be the ones hurt more than us. So I do believe 100% there is downside risk to the China conversation. I also believe that we hold the cards here and that China will come to the table and that we will get to a better resolution. And our deficit with China, our trade deficit, will start to drop, which will help us on every level. Manufacturing at home, it will help us with the dollar being slushed around the globe to fill these trade deficit numbers. That'll create a stronger dollar. It'll reduce pressure, inflationary pressures. There's a lot of reasons why we want this. There's a lot of reasons why China needs this.
So, Paul, I'm going to ask you this. I mean, it wasn't just China that retaliated. I mean, we know the European Union retaliated. So why weren't they exempted from the reprieve, so to speak? And then still, there's this kind of 10% flat tariff rate across the board for these countries. That's still really high, isn't it?
It is, but certainly higher than things were. And with the EU, I mean, I think I've heard mixed things out of the EU. So they've threatened to retaliate, but they've also offered to make concessions to go towards zero tariffs. So I think they haven't taken nearly as aggressive the stance that China has. And again, I think we're still in the early stages here. Like what Trump has sort of upset the apple cart of global trade here. He's trying to reconfigure a whole lot of things, and people were really worried about how high tariffs might be, and they've gotten a lot of relief with this announcement of postponement. But you're right, this 10% across the board tariff, we'll see if countries are exempted, we'll see if companies are exempted. It's hard to know exactly where Trump wants to end up here in terms of, is it for every country? Are they going to have big exemptions? What other sorts of concessions does he want to get? So I think we're still in maybe the first inning, second inning here of trying to work out all these trade issues, and it's going to look different than things did a month ago.
So, Anthony, I want to ask about trade deficits because many of the president's critics are essentially saying that they concocted this formulation about the first iteration of the reciprocal tariffs wrongly, or at least in a misguided fashion, based solely on our trade deficit or trade surplus that we have with XYZ country here. Rand Paul said this on CNBC yesterday. He said, quote, "The whole tariff debate is so fundamentally backwards and upside down." He said it's based on a fallacy, and the fallacy is this, that somehow in a trade, someone must lose, that somehow when you trade with someone, someone is taking advantage of you. Is that necessarily accurate? Is a trade deficit a loss? Are you a loser if you have a trade deficit with someone else?
Well, I'll tell you, this is how I view it, and this would be my answer. If we have massive trade deficits, which we do, and they've grown over decades, what is happening is the US dollar needs to go out of the country to fill those deficits abroad. And what that does is it creates a global slush of US dollars. What we want is to reduce those deficits, first of all, to bring those dollars back to the United States and pull them out so that we have a stronger dollar, right? And we have less inflationary pressures in the US. That's the first thing, right? We want our dollar to be stronger. We need less dollars out there in order to do that. We need to reduce trade deficits for that. This is a real important point, in my opinion. The second point is if we have large trade deficits, we're not producing at home, we're consuming at home. What we want to do is start to level the playing field where we are manufacturing and producing here and then shipping more out to be consumed away. So if we look at China, for example, if we were to take the Chinese economy, which is a manufacturing exporting economy, and then take the US economy, which is a consumption importing economy, and start to even that playing field, what we could have is two economies that are manufacturing and consuming, and a smaller trade deficit on the US side, which would increase manufacturing, GDP growth here, non-farm payrolls, private employment, and true growth here, and at the same time reduce the amount of US dollars that are slushed around, which would increase dollar strength. It's a win-win for the United States. So there's not necessarily a loser, but with trade and trade deficits, but as you carry large deficits over decades, you're essentially shipping out value. And we don't want to do that. We want to create value here, we want to retain it here, and we want a strong dollar. And that's why the trade deficits are important and why they're important to President Trump.
Okay, yeah, because you're kind of alluding to the Main Street versus Wall Street debate. Paul, I wanted to ask this, though. The concerns, the fears coming from JP Morgan, Goldman, and others that we were entering recession territory. Jamie Dimon was on with Maria Bartiromo a couple of days ago and said outright he believes we could see a recession later this year. Goldman, though, now has reportedly rescinded that recession call following the pause after putting the chance of a recession in the next 12 months at 45% this week, which was up from 35% last week. Did we get that close to recession fears? Were they premature in hindsight now, or no? Were we?
Well, I mean, if the tariffs that Trump had proposed last week were in effect and right now stayed in effect, there's no doubt we would have a recession. Recession would probably be the mild version of what would happen. The question is whether it was realistic to expect those tariffs from last week to remain in place this week. I mean, I was commenting last week that those tariff rates were almost cartoonish in a way, and I think no sophisticated investors really thought those tariffs would be the tariff rates a month from now.
Okay.
But the question is, where are they going to land? What are the deals going to be done? I wonder. I think there's some confusion in the Trump administration of the trade deficit is a bit of a red herring, in my opinion. There are other issues when it comes to the trading regime that matter, whether it's non-monetary barriers or forced IP transfer or other kinds of issues. And I think the Trump administration is taking this opportunity to go after those things. At least I hope they are. And there is a little bit of rebalancing going on. That they are raising, I think, tariffs to try to change the competitive landscape in certain ways to favor more heavy manufacturing in the U.S. But again, the question is how much of this is necessary with the lower, if they can get the tax cuts extended, if they can continue to get energy prices to come down and deregulate. I think we'll see a boom domestically, regardless of what we end up doing with the tariffs.
All right, Paul Mueller there, Anthony Esposito. We got to leave it at that. I can't thank you guys enough for your insight. We'll talk soon.
Thanks. Good to see you.